Had a bit of a muted start to the day today, and of course we did have those very strong gains yesterday, of course helped by that MPC decision to cut 50 basis points from the repo rate.
Yes, absolutely. The market was pleasantly surprised about the cut, as much as it happened a lot sooner than they expected. But, you know, it was welcome news in the market. And also volumes were incredibly high yesterday on the JSE at about 18 billion. So a very good day yesterday on the JSE.
I mean, should that rate decision have been such a big surprise if we look back at some of the economic data we've had out over the past week?
Well, I personally don't believe it should have been that much of a surprise. I mean, as the governor, Ntombenhle, mentioned that, you know, it is based on the recent data that we've been seeing and poor economic data coming out of South Africa and the South African environment. And I think that, you know, a deeper analysis that should have been made would have shown that, you know, we were supposed to get a cut sometime sooner than anticipated in September. And I don't think it should have been much of a surprise.
Now, when we've chatted to Nedbank Capital previously, you had spoken about two interest rate cuts this year of 50 basis points each. Of course, yesterday's came a little bit earlier than expected. Do you think we'll still get another interest rate cut this year?
Absolutely. We do believe that prime will end at about 10% this year. So, you know, we do expect one more cut. You know, as I mentioned earlier, this cut we were expecting, but just not so soon. So, yeah, we still do expect at least one more cut to come from the governor, also about 50 basis points cut.
Of course, we've had a bit of a strange reaction from the rand yesterday. It weakened, then strengthened again, back down to 7.97 against the dollar. Weaker again today, back at 8 rand and 3 cents against the dollar. Is this global factors driving the rand, or do you think it's also to do with that rate cut?
I think it's got a lot to do with perhaps some profit taking that, you know, the rand has been strong for a few weeks. And yes, of course, as Alicia mentioned earlier, it has got to do with the carry trades, with interest rates in South Africa. Of course, then it would affect the rand portion of that. So yes, we are expecting, so we would have expected for the rand to pull back quite a bit. But as we saw this morning when the rand opened, it was about 8.02 to the dollar, and just showing that, you know, there's still some appetite for risk in South Africa, and relatively speaking, our interest rates are still very high compared to other people in the other currencies in the global market.
Of course, we continue to get mixed data out of other economies. We had retail sales data out of the United States yesterday that was slightly disappointing. Also, initial jobless claims slightly disappointing, but good results from Walmart yesterday, helping to push the Dow Jones higher towards the close. So do you think we are still seeing that risk appetite in the market at the moment?
Yeah, you know, it is a big debate between the fundamentals and what the traders are doing at the moment. Like you're saying, you know, we would have expected the market to react adversely to the retail sales data that came out yesterday because of the importance of the United States consumer to its own GDP. We would have expected a big pullback and, you know, and for some pain to come into the market. But Walmart came out with better than expected results, as well as their outlook was very positive for the economy, for the United States consumer also. So then we saw that it buoyed the market up a little bit, but also, you know, it's just very difficult to tell now which is really driving the market, whether it's fundamentals or trading.
Well, looking at Walmart reporting good results, even though the US retailers aren't in general doing very good. We had the same here in South Africa. We had retail sales data on Wednesday showing a 6.7% decline for June. And yet we had Shoprite coming out with the trading update saying it expects profits to rise by 25 to 35%. And of course, Shoprite is very much in the same space as Walmart, isn't it?
Yes, absolutely. I mean, it's a very similar story here in South Africa. And as we're seeing today, what's leading the market is actually industrials, as well as, you know, those sectors that are affected by interest rates. You know, that's what was leading the market. It's almost as if they've forgotten what has happened earlier this week in terms of retail sales. And the retail sales figure was largely negative. So we would have expected more of a reaction or a negative reaction from the market, but not at all. Industrials are up today, you know, especially retailers and sectors that Shoprite would operate in.
Of course, just looking at some of the data that's been out this week, we had the US Fed Chairman Ben Bernanke earlier this week saying that he thinks that the US economy may have stabilized. We had those growth figures out of the Eurozone yesterday, and particularly France and Germany showing some growth in their economies. So it really does look like the global economy is starting to pick up some pace here.
Yes, and that's very important that, you know, we're seeing some positive news coming out of Europe in terms of GDP, because they are South Africa's main trading international partners, and so it will be a major boost to our exports. So very good news coming out of there. We saw also the United States reacted to it yesterday, and that helped to buoy their market also. So, we're looking forward to seeing other GDP figures coming out. But whether we're out of the woods yet, we're not sure. But quarter on quarter, France and Germany have actually just shone a bit of light on the situation.
And of course, today we have the University of Michigan's consumer confidence figures out in the US, as well as industrial production numbers. Do you think the market's going to be paying much attention to those?
Absolutely. Industrial production is very important, and so is the consumer numbers. But we're expecting both of them to have improved this month, and we're expecting industrial production to be up 0.4% from a negative 0.4%, which is a big move. And, that will signal whether, things are starting to pick up again on the production side in America, as much as the consumer has shown that they're not ready yet to go back into the market, but at least production and the export side of the United States would maybe have picked up. But it will be critical and key for those figures when they come out.
Well, just finally, we've had some results out this morning, and that was from Northam Platinum. It's reported a 70% fall in profits, but that's really in keeping with what the other platinum producers have been reporting, isn't it?
Yes, absolutely. And, we had anticipated this from Northam. They gave us, in their trading statement, they made it very clear. But I think it's just PGM prices, rand prices, have fallen quite a bit, and also Northam increased their number of shares in issue, and that also impacted on their headlines earnings per share. And then also sales volume has increased though for Northam, and I think by about 21%, and they're debt free now also. And there's a dividend. Unfortunately though, the dividend had to be cut quite a bit from I think 68% in 2008 to be about 46% right now. So yes, I mean, it's not so the market reaction to it wasn't too ecstatic, and not much of a reaction to there, sitting at about 40 rands. So very typical to the platinum miners.